Welcome back to Talk Tickers, everyone. We're going to be taking a deep dive into Occidental Petroleum's Q4 2024 earnings call, ticker symbol OXY. And let me tell you, there's a lot to unpack here. We've got record production numbers. They've got all these really intriguing projects in the works and some serious debt-busting moves going on.
Yeah, it's really fascinating, how Occidental is balancing their traditional oil and gas business with all these ambitious low carbon ventures they're working on. And it's not just they're talking about sustainability, they're actually investing heavily in it. And that's something that we'll definitely be exploring further today.
Yeah, for sure. Well, let's jump right into it. First off, let's talk about these headline results. Occidental just crushed it in Q4 with all three of their business segments. So oil and gas, chemicals, and midstream, all outperforming expectations.
Yeah.
And they raked in almost $1.4 billion in free cash flow.
Wow. Yeah, really impressive.
And full year production hit a record 1.33 million barrels of oil equivalent per day. That's huge.
And they also paid out almost $800 million in dividends and increased their quarterly dividend by over 22%. So they're rewarding those shareholders.
Absolutely. They're clearly focused on delivering value to shareholders while also, building a really strong financial foundation for the future. But, they're not just sitting on their cash. They're also aggressively tackling their debt.
Oh, yeah. Big time. They paid down $4.5 billion of debt in 2024. That's 7 months ahead of schedule. And this sets them up really beautifully to achieve their target of $15 billion in net debt by early 2027.
Wow, that's incredible. So they're really exceeding expectations on all fronts. They're delivering value to shareholders, they're paying down debt, and of course, they're still focused on their core business, oil and gas production.
Right.
And they achieved record U.S. oil production in 2024. Largely driven by their Permian Basin assets. And, particularly the assets that they acquired from CrowdRock, that acquisition seems to be really paying off for them.
Oh, yeah. And it's not just about acquiring assets, it's about optimizing them. And they've implemented some really clever strategies in the Permian. They've achieved what they call reverse synergies in the Midland Basin. So essentially, they found ways to cut drilling costs by over $1 million per well.
Yeah.
Streamlining operations and just leveraging their expertise.
It's incredible. Over $1 million per well. That's a game changer. So they're not just throwing money at the problem. They're finding really innovative ways to boost efficiency and squeeze more value out of every barrel.
Yeah.
Now let's zoom in a little bit on their performance in different regions. Starting with the Permian, obviously, it's been their star performer. But I'm curious about their plans in the future. Are they just going to keep drilling more wells?
Yeah.
Or is there more nuanced strategy at play?
Well, their Permian strategy is all about maximizing returns from their unconventional oil assets. So, they're not just drilling blindly. They're using a data-driven approach to target the most promising areas in both the Delaware and Midland basins. And, their recent extension of the Midland Basin joint venture with Ecopetrol, a Colombian oil and gas company, really speaks volumes about their commitment to this region.
Yeah. So they're strategically partnering, to unlock even more value from the Permian. That's a smart move, especially considering the Permian's crucial role in global oil markets.
Yeah.
But the Permian isn't the only area that they're focused on. What's the story with the Rockies?
Yeah, the Rockies present a different set of challenges and opportunities. While their overall production there is expected to be slightly lower in 2025, it's not really a sign of weakness. They're making a strategic shift towards what's called ethane rejection in the DJ Basin.
Ethane rejection. Okay. That sounds a bit technical. Can you break that down for us?
Sure. Essentially, they're choosing to separate ethane from the natural gas stream and sell it separately.
Yep.
While this might reduce their overall production volume, it's expected to significantly boost their revenue and margins because ethane commands a higher price than natural gas.
Ah, okay. So they're sacrificing some short-term volume for long-term profitability. That's a classic trade-off in the energy industry. But it's not just about ethane rejection. What other moves are they making in the Rockies?
Right. They're also making targeted infrastructure investments in areas like the Bronx development And, this will unlock access to 140 new well locations with incredibly low break-even points under $50 a barrel. So this means that they can produce oil profitably even if oil prices dip.
So they're playing the long game. They're making strategic investments that will pay off handsomely in the years to come. It's like they're building a fortress of profitability brick by brick. Now let's shift our focus to the Gulf of Mexico, which seems to be like emerging as a key growth area for Occidental. What's their strategy there?
Well, the Gulf of Mexico is all about maintaining current production levels, while strategically investing in projects that will unlock like new opportunities. They're focused on things like water floods and pressure maintenance initiatives, which help to extract more oil from like existing reservoirs.
Yeah, these are techniques that have been used successfully for like decades in the Gulf. But Occidental is taking it a step further with projects like Gulf of America 2.0, which have the potential to unlock hundreds of millions of barrels of oil. That's a massive prize.
It really is. It's a testament to their commitment to innovation and their long-term vision for the Gulf of Mexico. They're not just looking for like quick wins. They're building a sustainable offshore business that will generate value for decades to come.
Okay, so far we've seen that Occidental is firing on all cylinders in their traditional oil and gas business.
Yeah.
But what's really capturing everyone's attention is their bold move into low carbon ventures.
Right.
Right? They're not just dipping their toes in the water, they're diving headfirst with significant investments in carbon capture technology, particularly their groundbreaking direct air capture facility called Stratos.
Yeah, Stratos is a game changer. It's nearing completion in West Texas, and it's expected to become commercially operational this year, which is a monumental achievement, not just for Occidental, but, for the entire carbon capture industry.
I'm blown away by their ambition. They're not just like talking about sustainability,
Yeah.
They're putting their money where their mouth is and making it happen. But, let's be honest, carbon capture is still a relatively new technology and there are a lot of unknowns.
You're right. You're right. There are certainly challenges to overcome, but the potential benefits are enormous. Occidental sees carbon capture as a key part of their future, not just as a way to reduce their own emissions, but also as a potential new revenue stream.
Okay, that's where things get really interesting.
Yeah.
So they're not just looking at carbon capture as a cost, they're seeing it as an opportunity. In the next part of this deep dive, we'll explore exactly how they plan to monetize these investments and what it could mean for their future profitability. Stay tuned.
Welcome back to Talk Tickers. Let's delve a little deeper into Occidental strategic plans for 2025, shall we?
Sounds good. Their capital plan is a cool $7 to $7.2 billion for their energy and chemicals business, which is roughly the same as 2024 after accounting for that massive Crown Rock acquisition.
Yeah.
So where are they putting all that cash?
Well, it's carefully calculated balancing act. Over 75% of their capital is earmarked for like short cycle, high return projects, primarily in their U.S. onshore portfolio, especially the Permian Basin. This approach ensures a steady stream of cash flow while allowing them to like adapt quickly to changing market conditions.
So they're playing it smart, hedging their bets in this volatile energy market, but they're not just focused on the short term, right? What about their longer term investments?
Oh, they haven't forgotten those. They've allocated $900 million to OxyChem, their chemical business, with a big chunk going towards modernizing and expanding their Battleground facility. This investment will allow them to capitalize on the growing demand for essential chemicals, using everything from clean water to medicine.
So they're shoring up their cash cow, their chemical business, while also positioning themselves for future growth. Smart move. Now let's talk about those low carbon ventures. They're allocating around $450 million to this area.
Right. Exactly. Most of that is going towards the continued development of Stratos and their ambitious South Texas DX Hub and Gulf Coast sequestration projects. They're building a whole carbon capture ecosystem, and it's fascinating to watch.
It's like they're building a bridge to the future of energy, one carbon capture project at a time. But how does all of this translate into production growth? Are they planning to significantly increase their oil and gas output?
Well, they're projecting total production of around 1.42 million barrels of oil equivalent per day in 2025, which is a slight increase from 2024. What's intriguing is that while overall production remains relatively stable, their oil production is expected to increase by almost 3%, driven by those key growth areas we talked about, the Permian and the Gulf of Mexico.
So they're becoming more oil focused, which makes sense given the current energy market dynamics. But There's a bit of a wrinkle, right? Their first quarter production is expected to be lower than the previous quarter. What's going on there?
It's mainly due to seasonal factors and planned maintenance, especially in their offshore assets. Think of it as a pit stop to ensure everything is running smoothly for the rest of the year. They expect production to ramp up significantly in the second half of 2025, particularly in the Permian, where they're forecasting growth of over 15%.
So a bit of a slow start, but then full steam ahead. Got it.
Yeah,
The Permian isn't the only place they're bullish on. They're also excited about the Gulf of Mexico, right?
absolutely. They see the Gulf as a long-term play with massive potential. They're investing in a range of projects, from drilling new wells to implementing enhanced oil recovery techniques, all aimed at maintaining current production levels while also unlocking new discoveries. Think of it as a multi-pronged approach to squeezing every last drop of value from the Gulf.
It's impressive how they're managing multiple projects across different regions, balancing short-term gains with long-term investments. They're like expert chess players, strategically positioning themselves for success no matter what the energy market throws their way.
It's this adaptability that sets them apart. They're not just reacting to the energy transition, they're actively shaping it with their low-carbon ventures. They're proving that a company can be both a leader in traditional energy and a pioneer in the emerging carbon economy.
It's a bold and ambitious strategy, but it's not just about saving the planet, right? They're a business, and they need to make money. How do these low-carbon ventures fit into their overall profitability?
That's the million-dollar question, and it's one we'll tackle head-on in the final part of our deep dive. We'll unravel their strategy for monetizing their carbon capture investments, explore the potential of carbon removal credits, and analyze what this all means for their long-term financial performance.
I'm on the edge of my seat already. This is where things get really juicy, folks.
Huh?
Stay with us. Welcome back to Talk Tickers. We've covered Occidental's impressive performance, and their ambitious plans for 2025. But now let's get to the heart of what's got everyone talking, their audacious leap into the world of low-carbon ventures.
It's a fascinating pivot, going from a traditional oil and gas giant to potentially becoming a leader in carbon capture and management. But the big question is, how does all this green ambition translate into cold, hard cash?
That's what I want to know. They're pouring some serious money into these initiatives, so there has to be a solid plan for turning this into profit, right?
Okay.
Let's start with Stratos, that massive direct air capture facility in West Texas that's about to go live. What's the game plan for monetizing all that captured CO2?
Well, they've got a multi-pronged approach, which is smart. First, they can use the captured CO2 for enhanced oil recovery in their Permian Basin oil fields. So it's like a brilliant double win. It boosts their oil production and permanently stores the CO2 underground.
So they're actually using their carbon capture technology to produce more oil. It's like having your cake and eating it too.
Precisely. But it goes beyond their own operations. They're also eyeing the burgeoning market for carbon removal credits. So companies scrambling to offset their emissions can purchase these credits from Occidental for the CO2 that they capture and store.
So it's like they're creating a whole new commodity.
Yeah.
Carbon removal.
Yeah.
Talk about being ahead of the curve. It sounds incredibly lucrative, but are there any risks involved?
Oh, it's definitely a bold strategy. And there are always risks with any new market. There are regulatory hurdles to navigate, technological challenges to overcome. And the long-term demand for these credits is still uncertain.
So it's not a guaranteed slam dunk.
Yeah.
But it has the potential to be a home run.
Exactly. Occidental is taking a calculated risk, and if it pays off, they could be sitting on a gold mine. But it's not just about carbon capture, They're also exploring other low-carbon ventures, like investing in direct lithium extraction technology.
Wait, lithium, like for batteries, are they trying to get a piece of the electric vehicle boom?
Yeah, they're exploring the commercial viability of extracting lithium from brine resources, and this could position them as a key player in the booming EV market.
Yeah.
It's a savvy move considering the soaring demand for lithium-ion batteries.
It seems like they're leaving no stone unturned when it comes to finding new opportunities in the clean energy space. They're not just adapting to the energy transition. They're actively shaping it. It's impressive, to say the least.
It really is. They're not afraid to take risks and make bold bets, which is what sets them apart from many of their peers. But for investors, the bottom line is always the same. What does this mean for their stock?
That's the million-dollar question. Should we be rushing out to buy OXY shares?
Well, that's where things get tricky. We can't give financial advice, but we can analyze the facts. Occidental is generating strong cash flow. They're committed to shareholder returns through dividends and debt reduction, and they're making these strategic investments in low carbon technologies that could drive significant growth in the coming years.
So they're a company with a solid foundation in traditional energy and a clear vision for the future. Sounds like a recipe for success to me.
It does. But as always, it's crucial for investors to do their own research, understand the risks involved, and make informed decisions based on their individual investment goals.
Okay. Okay. Before we wrap up, let's have some fun with our "This is not financial advice" segment. Any outrageous but plausible trade ideas based on Occidental's ambitions?
Here's one. What if Occidental becomes the go-to carbon capture partner for the entire oil and gas industry? Imagine them building a global network of DAF facilities capturing CO2 for everyone.
Whoa, they become the Amazon of carbon capture. That's a bold prediction, but I could see it happening.
Yeah, if they corner the market on carbon capture, their valuation could skyrocket. And with their aggressive debt reduction and dividend growth strategy, they become a darling of both growth and value investors. It's a long shot, but hey, stranger things have happened.
Well, folks, there you have it. Occidental Petroleum is a company on the move, pushing boundaries and positioning itself for success in both the current energy market and the transition to a lower carbon future. They're a company to watch, that's for sure.
Thanks for tuning in to Talk Tickers, and remember, this is not financial advice.